What's going on, guys? Welcome to episode 2 of How to Read Charts. Today we're going to be looking at relative equal highs and relative equal lows. Hopefully you've watched yesterday's video where previous video where I explained what candlesticks are. And now that you understand what a candlestick is, we can get straight into the chart. I can understand that things are going to still look very confusing and very crazy, but if you're here to learn then, and if you stick to what I'm saying then, eventually it'll start to make some kind of sense. Now we are looking at ICT concepts, which means that everything that I'm teaching or like showing you is what I've learned from his channel himself. So make sure to check him out. But yeah, we're looking at relative equal highs and relative equal lows. Above relative equal highs resides buy side liquidity, and below relative equal lows resides sell side liquidity. Now, you don't need to know what liquidity is right now. We will explain that in another video. However, you just need to know that above is where liquidity is and below is also where liquidity is. And we need to learn to train our eyes to identify these things. And in this video, I'm going to be showing you how you can go in your charts and start to train your eyes to recognize relative equal highs and relative equal lows. Now, before I get into this, you need to understand there's no correct way of doing this, and there's no right or wrong way of doing this. Just go in and start looking for relative equal highs and lows. You might get it right, you might get it wrong, but slowly you'll get more and more specific, and you'll be able to identify them and see what I mean when I say relative equal highs or relative equal lows. Let's get straight into it. I'm just on a 15-minute chart. Price is fractal, meaning we can do this on all time frames, and I'll show you that. But we're just on GBPUSD right now, and I'm just going to look for relatively equal highs and relatively equal lows. So over here, I can see some relatively equal highs. Here, just among here. So all of these highs I see are relatively equal. This high, 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 and this high. So this is what I see as relatively equal highs. So I'm going to mark out a line, and I'm going to write REH, just for relative equal highs. And remember, this is just an exercise that you can do to train your eyes. Where else do we see relative equal highs? Let's have a look. So even these highs, this swing high and this swing high, those two are relatively equal. One rule of thumb is that for there to be relative equal highs, it needs to be 2 or more. So I'll say that again, relative equal highs needs to be 2 or more within like a close proximity. So these two highs here and here, they're relatively equal high, which is why I've marked that out like so. Here, you could argue that this swing high and these two are also relatively high, or you could just say that these two in general are relatively equally high. And I say that because these two are, they're right next to each other, but they're still two highs which are right next to each other. Does that make sense? So these can be classed as relatively equal highs, but generally speaking, we like to have some kind of space. Like here, we've got relatively equal highs, nicely spaced out. So here's another example. We have relatively equal high here and here. These swings high in here and here. So these are relatively equal highs. And remember, there's no right or wrong way of doing this. We just need to learn to identify these levels, because that is where liquidity resides. Relatively equal high here, here, here. And then we can see even here, these highs here. So these are relative equal highs, and what you want to do is you want to just go in your charts. Like I said, this is the first thing I learned. I'm just teaching how I learn how to read charts, right? So you just need to go in your charts and just recognize and find relative equal highs and lows. And in a bearish market, so in a bearish condition, which you can see now, you'll notice that relative equal highs tend to get respected. You can see these relative equal highs aren't getting destroyed, right? But now if we start looking at relative equal lows, you'll notice that they constantly get taken out. And I'll show you what I mean. So here's some relative equal lows. This low and this low, they're relatively equal here and here. And we have a gap and we have a range. So that makes a relative equal low. So we can put R, E, L. We'll make it red. And I'm going to put it on the bottom. And you'll notice that because we're in a bearish market, relative equal lows tend to get swept. So you can see it gets disrespected here, like so, aggressively traded through, and then we move to the next level and we continue lower. Do we see relative equal lows anywhere around here? I do. Over here, relative equal lows. This low and this low is also relatively equal. What happens? Because we're in a bearish market, remember we're moving lower, you can see it gets swept aggressively too. Can we see any more relative equal lows? You could argue that these two are relative equal lows, so you could mark out that relative equal lows. What happens? We're in a bearish market, it gets swept. Move lower, any more relative equal lows? Here, here, all of these are all relatively equal lows. Remember, even the word relative is relative to you, right? So that's another reason why you need to understand that there's no right or wrong way of doing such a thing. Why you just need to go in your charts and do this exact thing. Like, this was the first exercise I did. It's going to look crazy, but slowly you start to understand and really grasp what's going on. Anyway, relative equal lows, right? What happens? We get swept through until we have a reversal where we have a low, a high, a lower low, and then from then on we break higher. And from then on, what do we start noticing? When we're bullish, the relative equal highs start to get disrespected and relative equal lows start to get respected. So all those relative equal highs we marked out earlier, what's happening? Run. Like it's running, it's getting ran through here, ran through here. Did it run through here? Ran through here. Does it run through here? Run through here, here. Does it run through here? Eventually it does. And what you start to notice, the more you do this, the more you realize is that the market just draws to these levels specifically. Like these highs and lows, the market is constantly referring to these levels because, again, that is where liquidity resides. Now, I'm not saying every single high is going to get ran and every single low is going to get ran. Because, for example, we have relative equal highs up here. Do we see that getting ran? Let me just quickly mark that out. We have relative equal highs up there. Do we see this level getting ran? No, it doesn't. It fails to reach that. But we still know that there's liquidity residing up there. So we know that eventually price may want to go and sweep that, which we do see happen later. But again, in terms of learning to read the charts, you just need to go in and understand and start to recognize them. Remember, we're just training our eye here. We're still early stages. You can't rush this stuff. You cannot rush this stuff. Another thing to take note of is that we are assuming with ICT concepts that this is an algorithm and we're simply cracking the code, right? So assuming it's an algorithm, the algorithm needs to refer to certain levels. Relative equal highs and relative equal lows are an example of those levels that they need to refer to. Now, there are other PD arrays that we're going to speak about in other episodes, such as order blocks and all that fun stuff, and swing highs and swing lows, etc. And I'll explain more so what I believe what liquidity is and why price draws to these levels. But if I'm just teaching you how I'd teach myself, and I'd say just go in your charts and start to recognize relative equal highs and relative equal lows. Now, just to show that price is fractal and this can be done on any time frame, we're going to go up to we'll even change pair. Let's look at gold. Gold's moving a bit crazy right now though, but we can go gold, we can go on a 4-hour chart, and we can look for relative equal highs and relative equal lows. Even right now, this is live, right? Live chart data. Do we see any relative equal highs or relative equal lows? I see relative equal highs, high, high, high. So we can mark that as relative equal high. What do we write? REH. Remember, price draws to these levels. Relative equal highs. These highs, this high, I'd say they're relatively equal. Even these highs, all along here, 1, 2, 3, these are all relatively equal in terms of highs. And even above here. And remember, we're in a bullish market. So when we're bullish, what are we expecting? We expect relative equal highs to get taken and relative equal lows to be respected. And that's exactly what we're seeing happening, right? So we have all those relative equal highs. And what happens? Price trades to that level. Bam. Does price trade to this level? Bam. Is it going to trade up to this level? Probably, but that's a story. Like, in terms of analysis, that's another story. But you need to understand, like I said, that's how you start to grasp a draw on liquidity and a draw on the market. Like, I'm bullish on gold right now anyway, but there's a lot of, geopolitical things going on now. But what I'm saying is that I know where it's likely to draw to, the levels it's likely to draw to, and where it's gonna. You see how it draws to this level, and then we consolidate a little bit, pull back and move higher, pull back, move higher. These are the levels that I'm expecting that kind of action to happen. I expect it to reach it, have some kind of pullback or whatever, and then move on to the next level. Now, I'll explain more in detail in other videos why that is and what that is. But again, relative equal highs and relative equal lows. Look at how the relatively equal lows here get respected. These two lows are relatively equal. Yes, this is the 4-hour and there's only 2 lows here. You drop down to a 15-minute, 5-minute, there's going to be multiple lows that create this swing here. And I'll just show you that now. So we have relative equal lows there. Even here, we could probably argue that there's relative equal lows. And here, but do we see that these lows are getting taken? No, they are not. Why? Because we're in a bullish market, meaning that relative equal highs are the other levels which are getting drawn to. Let's drop down to 5 minute. See how they've got 3 lows, 1, 2, 3 there. A few lows here, relatively equal lows. Here, relatively equal. But this is what I mean. It's not, there's no specific or right or wrong way of doing such a task. So I hope you guys found this insightful. If you do want to look at something a little bit more interesting though, on gold, once we're here, where can we see relative equal highs? This is related to geopolitical events, but where can we see relative equal highs resting right now, guys? You know, that's something to consider. But that's a story for another day. I hope you guys found this interesting, and I'll catch you in the next one. Peace.